Well, good morning, everybody, and welcome to the next in our series of global briefings on fintech and the aftermath and the survival mode that we've all been in through the pandemic. Today, we return to a region that we first covered in the spring before the full force, early in the spring before the full force of the pandemic hit, where we talked to Norbert, who's on the panel today, but also fintech ecosystem representatives in Australia and New Zealand. Today, we've got an incredible mix, really reflecting the full geographical span of Asia, from Namir over in Dubai, to Jenna in Malaysia, to Norbert in Japan, Mushir in Delhi, and Bill over in Beijing. We're going to have a conversation really about what the pandemic has meant for the region's financial services industry, particularly the fintech industry. Get a sense of what the world is going to look like as we come through recovery and out of what has been clearly an unprecedented time for everybody everywhere. But also, I think, given some of the kudos, some of the acclaim that parts of Asia have attracted in terms of the way they've handled the coronavirus and its aftermath, we also want to get a sense of, are we now seeing an emergence of a new Asian confidence, and is that going to shape both the future of business, but particularly the future of fintech and the future of digital financial services? So I'm not going to talk any more. I wanted really to sort of hear from our panelists today. I'm going to start with Jenna, who's over in Kuala Lumpur in Malaysia, and is a fantastic part of the ecosystem there. She runs Fintech Malaysia and is also involved in a fintech startup company. So Jenna, over to you, and welcome, and we look forward to hearing from you today.
Thank you, Simon and fintechs for having me. My name is Jenna. I am part of the Fintech Malaysia, and I'm also RegTech Chair for Fintech Malaysia. I am also co-founder for Fort Ninja, a cyber security company that is looking to fix out the issues in cybersecurity ecosystem. And one of the things that I'm looking from Malaysia and Asia point of view is I'm quite excited about the virtual bank and neobank that is coming up in Malaysia. The draft exposure is just kicked off. A lot of the fintech that has been developing and developed in Malaysia has actually assisted in us coping during this COVID-19. So I think fintech has actually helped out in terms of making sure that digital payment is stabilized, e-commerce can handle the logistics of ordering food and all these things. So that's my view. I think fintech will be increasing its activity in Malaysia and Asia.
Thank you very much, Jenna. Syed, let's go back to the other part of the other side of Asia. Let's hear from you in Delhi. You obviously span both Hong Kong and India from your work. What has the impact meant for the Indian fintech marketplace, and what sort of trends are you seeing coming out of this now?
Thank you, Simon. So just to correct, I am based in Hong Kong and I'm currently in Hong Kong. Right. I'm originally from India, and yes, with the work we do at FinTech Asia, we do liaise quite a lot between India and Hong Kong and the Greater Bay Area region in China. Right. So just very quickly touching upon India. India is starting to emerge out of the lockdown that the Prime Minister had and the government had imposed at the end of March. So we've had 2 months and a little bit over. They've been very structured in terms of defining different colored zones based on the intensity of the impact of the pandemic, and things are starting to return to normal. And the government has also announced a host of measures to support the ecosystem. Having said that, I think the main pain is a lot of the non-banking financial corporations, as we call them in India, the NBFCs. These are licensed corporations that are providing financial services, but at a much smaller scale. Largely on the lending side, have been heavily impacted because they don't have a bank guarantee behind them. So they are very, in their capital deployment has been reduced significantly. Payments has been Digital payments has picked up in India largely because the ecosystem is growing on its own. We have now 700 million people who are using internet, mobile internet in India. And secondly, the Prime Minister himself and the head of the Reserve Bank of India have both been advocating for digital banking and digital initiatives. So from that perspective, I think India is starting to push more towards digital payments, and people are actively now trying to avoid cash. That's from an India perspective. Quickly on to Hong Kong. Unlike most of the world, I think, but probably more so East Asia, like South Korea and Japan, Hong Kong never went into a full lockdown. We did have social distancing norms. We had limitations on number of people in a limited space or in restaurants, etc. And working from home was optional, was never made mandatory by the government. But most organizations followed that. As of last week, most banks are now back to working from office. The economy has been impacted severely because of the virus, also especially in the hospitality world and in the aviation world, being an international hub. But on the digital side, we have seen some very interesting developments. Two of Hong Kong's well-known fintechs have raised money, one being Neat, which is a virtual bank. On the other side, you saw 8 Securities, Hong Kong's oldest robo-advisor, being acquired by Sophie from the US. On the other hand, we've had the virtual banks launching their services. These are digital-only banks, and about 3 of them have launched their services, and we also have had 2 virtual insurers launch their services. So things are accelerating on the fintech end here in Hong Kong, and I think the pandemic has kind of helped people get on board to more digital services. Hong Kong people are very tech savvy. There's a deep penetration of mobile internet and smartphones. However, adoption of fintech was lower due to trust issues, which is slowly being overcome because of the necessity to not do things in person, right? So yeah, that's a update on 2 sides of both India and Hong Kong.
Thank you very much, Machine. Very, very helpful there. Bill, can we turn to you in Mashir's big neighbour over in China? What sort of things are you seeing? Just for clarity, you're also connected to the Fintech Association of Hong Kong, amongst other associations. Tell us a little bit about the Huawei perspective and what's happening, and what are you seeing in terms of the fintech landscape now?
Yeah, I'm in Shenzhen, China, and I'm Vice President Corporate Strategy, and I lead our global financial services and financial market strategy here at Huawei. Also part of the Fintech Association of China, of Hong Kong, and committee co-chair, one of the committee co-chairs for the China Greater Bay Committee. And then I'm also an advisor for another committee on FinTech for Good, their investment committee. I would say it's characterized, for me, what I'm seeing is really more the continuation of the same and some of the trends. From a China perspective, it's really, the term FinTech really broadly encompasses everything that's related to financial technology. Okay, so the common buckets of payments, blockchain, so on and so forth, are kind of embedded in the big platform, big tech players, Ant Financial, Huawei to a certain degree, Tencent, okay? And connecting the real economy, okay, small, medium enterprises with the back end big banks and the plumbing that's in between. So with China announcing the blockchain services network, the digital RMB, connecting these 2 worlds even more tightly, it's a continuation of that theme, okay, that was pre-pandemic, and this is accelerating it now. Another area that I'm seeing that's accelerating further is the integration, for lack of a better term, I know that may be a bit politically sensitive, between Hong Kong and China in terms of investment, some of the new security laws that have been put forth by Beijing. But from an investment perspective, investors in companies and IPOs that were listed in the US may now, under additional scrutiny, go to Hong Kong, and there's going to be tighter integration between Hong Kong and the mainland, and tech will certainly follow. So, from that perspective, there's other initiatives, IPO Connect between Hong Kong and the mainland. Wealth Connect is another platform, access to secondary markets for investors on both sides. So a lot of exciting things that were starting up pre-pandemic that you're going to probably see accelerate now.
Great. Thank you very much for that, Bill. Namir, you're over in the Middle East in Dubai. Dubai, originally a kind of region that looked very much towards Europe and the US. More recently, it's pivoted to look at sort of opportunities in Africa. Obviously, India is also very close, and there are strong ties there. Give us a sense of how Dubai is coping with this. It is under a lockdown. The airlines have driven growth for Dubai as they have for other Gulf economies. What do things look like there?
Thank you, Simon, for having me, number one, and always good to hear from all these experts. Now, I'll basically speak on behalf of the MENA perspective, on the broader perspective of what is happening in the region, rather than specific to Dubai itself. So you see, let's understand, if you're talking about UAE and if you're talking about Dubai itself, let's just understand the sort of hub it is. The sort of hub it is such that we're catering the entire region from here. And we're looking into a population in the region which is around 380 million people, right? And I always talk about these numbers, which is the youngest population regionally in the world, around 26, the median age. And then at the same time, you're looking into a fantastic digital adoption as well, with almost 110% people having a mobile phone and 76% people having a smartphone with them. And pre-COVID, an insurance penetration standing at a dismal 0.6% for life insurance, and financial inclusion standing at around 15% regionally, right? So we always were a great opportunity even before the COVID situation already happened, and the region was adapting towards going towards digital. Now, what COVID had done is typically made the entire situation a lot more surfaced, where we're looking into more, I must say, exaggerated transformation by companies or regulators and governmental agencies, which were already looking forward towards it, right? That's why you would see a lot of international players stepping into the region and setting up their hubs and setting up their premises over here to cater to the large demand and the surge in digital transformation across the region. So that will definitely continue. Now, when we're talking about the impact that had happened, so Dubai is this is the second day where the lockdown has been eased, and so people are going out, and the retail activity is now definitely going to pick up. However, there has been a significant hit across the platforms. Let's say, and this has been, no country has been spared in terms of how their platforms had been impacted. So ride-hailing platforms significantly took a hit of almost 90%. And then the food ordering platforms, which we talk about the initial growth as well. But initially they took a dip of around 60 to 70% as well. But now we see week over week growth of almost around 10 to 15%. In fact, I would say 10 to 20%, ranging in between that, where the where the food ordering platforms are having a week over week growth. However, let's also understand the retail sentiment, how that has been damaged typically. So the retail sentiment gets damaged significantly for a couple of things, because people are not stepping out, right? So even if the lockdown has been eased, let's not forget the 2 months of behavioral change that has been there globally. So customers will and users will become a lot more conscious, or ethical consumption is going to come into play. Conscious consumption is going to come into play. These are those behaviors that is going to be globally there, but of course we expect that to happen in this region too. So which means, yes, people will go out, but then let's also understand the fact the other economic impacts that they have had, which includes layoffs as well, regionally and internationally too, which does affect the disposable income of an independent individual, right? And that does affect the entire supply chain and the value chain that you have in the left, right, center. So that is going to be impacted. However, on the contactless side, which has been the norm across the globe as well, we are no different. So we have seen significant adoption of people adopting the contactless payment methods. People are more comfortable using it. And I must say, if you're talking about UAE in specific now, the measures are quite strict. The SOPs are quite strict to ensure the social distancing measures are adhered to, and they're strictly adhered to. And same as for all the GCC countries. If you talk about Pan-Arab region, then we're looking into, once again, there's some emerging economies as well in the MENA region. So emerging economies have a different cycle. let's understand that they're opening up. They have to open up because we also have issues with stark poverty in the region in some countries, which cannot sustain themselves with a complete lockdown. So you have to balance between at one side the livelihoods and the other side the health concerns. So things are being managed now. Things are opening up as they're opening up world over, and economies will definitely pace up. In terms of fintech, I believe it was a great opportunity even before, like as mentioned, pre-COVID, and during and post-COVID, it's only going to be a much more opened up opportunity because, like I said, 380 million people. I've given you the numbers. And that makes the region a lot more ripe and be a region that could be easily leapfrogged as well via different aspects.
Thank you for that, Namir. Thank you very much indeed. And last but by no means least, to Norbert over in Tokyo. Norbert, we've spoken a number of times over the last few weeks. Clearly, Tokyo is before the pandemic sort of keen to kind of reposition itself as a very big financial center for countries outside Japan, and focus on fintech. Is this pandemic and its sort of aftermath and recovery, is it going to change that? What do we think is going to happen?
Yeah, thank you, Simon. Let's start with the public service announcement. So you can ask questions if you join us. There's a Q&A button. After the introduction, Simon doesn't have any questions anymore. So if you don't ask any, we'll be quiet for the next 40 minutes, and we want to avoid that. So Japan, what a contrast to what Namir just said, right? We are the oldest population, and it's a shrinking market, it's a shrinking population. So you see many of the large financial institutions going abroad, doing acquisitions, and actually generating 50% of their revenue from outside Japan, and lots of that from Southeast Asia. So while based in Japan, there's certainly a strong regional component. We have not been in the formal lockdown, as it has been said. We have been requested to stay at home and be good citizens, which Japanese and guests who enjoy Japan, of course, follow. And so you've seen a decrease in traffic, 70–80% for sure. Some of those people who actually went into the office had to go to the office because legal documents still get stamped by hand. So you have a personal and you have a corporate seal that sits with a legal counsel or senior person. And so if you then do a contract, you actually need to stamp that. Similar things apply to government aid. Actually, the government had come out and provided a list of those subsidies and support monies that are available during the pandemic and how they're accessible. And that's the C of red. And the red means you need a handle, you need this personal seal. You can't apply online, you need to show up in person. And lastly, you can't submit documents electronically. And the fact that they've done that self-assessment is, I think, a great sign for the initial steps in changing business practices. Simply because although we're officially out of the lockdown, it will still take some time until things normalize, if they ever. My personal opinion is that we'll see a second wave. And so to go back to how we started the question, Asia has been doing well so far. I do think it's way too early to declare victory, and I think we'll be in a very reduced state for a fairly long time. We've seen quite a bit of the companies, for example, even call centers being run 100% remotely, which is amazing. And so also the financial services institutions see a role in serving the society, and as part of serving the society, it's also keep people healthy. And it means that we just reduce the number of people in the office. So I think there's two things I'm interested in, which are maybe less fintechy. One is that we'll no doubt see a wave of bankruptcies, and the regional banks in Japan are pretty weak. So it will be interesting to see how they're going to survive that and whether that leads to a consolidation wave across the industry, which could arguably create a fourth mega bank. And secondly is clearly the real estate sector. If that applies to any country around the world, if we suddenly decide that we need to compensate for the loss of revenue that we have across the board, an easy way to address that is to cut cost and to cut real estate costs. So I think these are two macro trends that will take a few months to work out. The low-hanging fruit, the no-brainer is there will be digitalization and much more of that. So back to you, Simon.
Thank you very much, Norbert. Absolutely. And that's ending on digitalization sort of brings us perfectly into the sort of the conversation I think we have to start here with. And funnily enough, one of our participants today has asked a question relating to this. Mushir, you talked about adoption with regard to Hong Kong. Bill over in Shenzhen in China, I mean, China's obviously done incredibly well at adoption on an unbelievable scale when it comes to new digital fintech services. Now, the challenge for adoption, of course, is that it requires multiple things. It also requires regulation, and it requires a trust of the products that are being created. Mushir, perhaps we can start with you on this. When you look at India, they issued a new regulation, and it's propelled the country towards massive adoption of cashless payment. But what is it that's now going to be needed to kind of complete the circle and to really drive adoption at a universal scale, so that access to financial services increasingly depends less and less on physical and personal contact?
I think when you're looking at India, it's a very different ball game, right? So you're talking about a population of 1.3 billion people, of which only 700 million have access to internet, of which probably only 400 million have access to mobile internet, which is fairly new. So the first part of this is that irrespective of government policies, it all boils down to what is going to be the penetration of internet in the economy and how much of it is going to be smartphone driven. You mentioned about Shenzhen and China. China has got about 850 million users, internet users, still 400 million to 500 million who don't have internet, mobile internet at least, and 90% of their payments are done through mobile payments. So that's a huge number that's coming through, and that will be the main thing that India needs, is going to be the adoption of smartphones for a bigger push for the overall fintech ecosystem. On the payment side though, India has a very unique infrastructure, which is the India Stack, which is a digital infrastructure to enable biometric identification through Aadhaar, the world's largest project when it comes to biometrics, with 1.2 billion people mapped to it. And along with that is the UPI, your Unified Payment Interface, which is where all the payment players, including global players like Google, Amazon, WhatsApp Pay for now, are all integrated, and it makes it very easy for payments. Under that, there is also a feature which allows people with feature phones to make transactions for multiple payments, right? So that is actually a big push that the government is trying to enable, is minus the smartphones, people still should be able to push through. So I think that's a key element beyond regulation, is the availability of the technology. And India is still, I would say, a pretty cash heavy economy. We are a very informal economy as well. So that makes it a bit difficult for tracking of things, and people prefer that cash so that they don't get tracked. It was one of the stories that in Hong Kong we had an issue, was a lot of taxi drivers did not accept even Octopus or Alipay or WeChat Pay for that matter, or PayMe. One of the reasons was they did not want their tips to get reduced, because people would leave the change. If it's $82, they give them a $90, and they say keep the change or whatever. And secondly, they didn't want their partners to know how much money they were making and have access to their incomes as such, or track their income. So that's another conundrum you face when you're running informal economies.
Absolutely, yes. Thank you for that, Mushir. Bill, perhaps we could turn to you in China. China, as we said, created some incredibly scaled technology companies that also do payments and financial services. Part of the challenge of that, is that you end up with the kind of winner takes all scenario. That being said, how, what's your view in terms of the kind of new innovations that China is seeing? How are they going to be able to kind of break into a marketplace that's going to be increasingly sort of dominated by internet, these big platform giants?
Well, it's going to be an evolution further of convergence with other technologies, artificial intelligence, advanced biometrics, facial recognition certainly comes to mind. And you're going to see, I think, further development in that space based on some investments that they put in place for surveillance for COVID-19, thermal imaging, monitoring, and some of that investment may get pivoted towards the payment space and other financial services that are being consumed. Okay. So, we already have here on our campus Smile to Pay. So I can pay for a cup of coffee with Alipay, look into the camera, and in the back end, it's integrated to my Bank of China account. So there's not as much of a concern in terms of data privacy here, because over the years that China has opened up and bridged the real economy to the back end, it's made people's lives and citizens' lives definitely easier. Another advancement that's kind of interesting is Tencent has instituted a social credit system that was kind of born on the back of gaming. Okay, so based on what types of games gamers are playing, they get social credit points. Okay, and this can kind of get weaved into the ecosystem of payments and microfinance as well. Okay, what type of citizen are you? What games are you playing? What websites do you look at? So on and so forth, and it will give you access to further credit. But it's kind of a double-edged sword, okay, because those things are working here, but will they work across the border necessarily? Or more broadly, as some of these giants, including ourselves at Huawei, we look to go further into Europe or Africa, okay, and the West, where there's different regulations and there's different cultural norms. So that's the biggest challenge in my mind, is overcoming those barriers, regulation and the cultural barriers. So.
Okay, thank you very much. Namia, perhaps we just turn to you in the Gulf, over in the Middle East. I mean, do places like Dubai, Abu Dhabi, Doha also, they're creating fintech centers, but the fintech sort of community is at a relatively early stage. The marketplace is still quite dominated by the traditional banks. How are they going to how is the financial regulator, do you think, going to respond to a need now to make more services more digital and remove that need for physical interaction?
So I'll basically add on to the point, as you mentioned, it's on a nascent level. Well, I must say that it has really progressed versus other regions at a very fast pace versus, the growth of how the fintech community has grown over here. I think it's really impressive. It's superior to many other regions as well. And the good thing about the region is the regulators itself have been a lot more future forward as well. So let's say if I talk about in specific to UAE, we have the likes of Abu Dhabi Global Markets, we have the IFC, ADGM has come up with some of the most refined regimes. We have, we initially had the OCAP framework, which is the operating crypto asset business, and digital banking regime, wealth management regime, and multiple other regimes have been coming in that favor the overall fintech community broadly. At the same time, the regulators once again have been future forward in the region. You have EMIs and PSPs being issued to non-FIs as well, right? So which is once again showing you the openness of the regulators, that they are welcoming innovation coming into the sector from outside the industry itself, right? At the same time, the regulators have been now at the moment, for example, UAE did set up the fintech office, which is now aggressively working with multiple stakeholders in the ecosystem, right? And coming up with regimes and policies that once again are favoring the overall ecosystem broadly. The other thing to support the ecosystem, what more has been done, I must say, by the regulators and once again by the governmental agencies, is to basically provide subsidies and to provide rent reduction. So some of the things that had been done is waiving off the the licensing fees, waiving off the rental fees, waiving off. There's a whole array of there was a whole list of things that have been waived off in terms of fees for the fintechs itself.
Yeah.
So I believe that is a significant initiative that has been taken in the time of crisis, where liquidity really matters, and to support and the government agencies and the governments to take the hit and absorb the the financial hit that they are taking. That basically makes a lot more sense.
Thank you very
Now,
much.
apart from that, some of the other things that have been done in terms of the initiatives is basically, I must say, when we're talking about the Egyptian landscape, when we're talking about the Bahraini or the Saudi landscape as well, even over there, what has happened is that the fintechs, they have taken a lot of hits as well, let's say financially, right? But at the same time, with a traditional system that you mentioned, where the banks have really taken the lead, so the dynamics are not as the same you would find in Hong Kong or you would find in Japan, where the fintechs would come out and they would come out independently. The dynamics over here in the region is that you have to partner with a traditional bank. So you have to, right? So, but at the same time, what we have seen is that the banks have started partnering very closely with these emerging fintechs. And then you're talking about BEN sponsorships being given to emerging fintechs. You're looking at, the banks are collaboratively working with EMIs and PSPs as well. So this is something that you have seen over here in the region, and this will continue. Plus, at the same time, in this crisis, that what we have seen, the other thing is the conversations that I've been having with the payment schemes as well, the conversations that we have been having with the unicorns who are now stepping into the fintech landscape. There were difficulties initially, but now the banks have also realized again, I mean, they had realized before as well, but now it's a lot more surfaced again, is the dependency on how these fintechs and these players can actually help them bring in efficiency and effectiveness into the system. Because now they've seen the lack of, if they're not basically dependent, or if they're not working in close collaboration with them, they will lose, and they tend to lose. But then yet again, the dynamics again, it's a very different dynamics. Like I said, the dynamic over here is such that you have to work in collaboration with fintechs, and fintechs have to work in collaboration with the banks, and that's how it is.
Thank you very much for that, Namir. Thank you very much for all your questions. It's really great to see them coming in. We're going to come to them in a minute. I just want to sort of turn the question a little bit to look at the purpose of fintech. Now, I know that Bill, you're involved in fintech for good. Jenna, I want to sort of turn to you though, just from the perspective of the purpose of fintech. Do we now feel that this crisis is causing fintech companies, or the fintech sector rather, to sort of find its groove, in the sense of finding a reason for its existence? Malaysia's done very well at building an Islamic financial services marketplace, which connects well with Namir's region, also Indonesia. You've got Singapore on the doorstep. Tell us a little bit about your kind of view in terms of how this pandemic is going to reshape how fintech defines itself.
I think this pandemic has made us focus to also help the vulnerable and the helpless as well. There are a lot of numerous groups that are created by volunteers in Malaysia, and I think Southeast Asia as well. There's some focuses on helping fintech startups. There's some focusing on channeling goods, day-to-day goods like basic food and needs, and fundraising. Actually, the interesting part is a lot of people are using crowdfunding and digital payments to channel the little contribution they have to all these social groups and volunteer groups. And I think it's quite interesting to see that fintech has enabled this. You may be stuck at home, but I think your little contribution, even to Grab, right? Grab is where I think it's a ride sharing in Southeast Asia, where they gave way to Uber gave way to Grab. So Grab has a financial arm as well, Grab Pay. And a lot of what we see from the people is they started to support riders and logistic people by donating what little they have as well. So I think this pandemic has made us focus to also contribute if we can, whether from monetary point of view or for support. And I think from the Islamic point of view, the virtual bank that is coming up, the draft framework is being finalized right now, and Central Bank has launched this. And one of the part of focus is to get a virtual bank or new bank license that is catered towards, for example, SMEs, the unbanked, the underbanked, and also those who cater to Islamic products as well. So not to forget, like Brunei as well has the Islamic economy. So it's quite interesting where, and this is when Namir can also add on. I think the Islamic digital economy, it's very interesting, where people thought that, you know, only those who are Muslim will be able to use the products, but actually the products cater to anyone who's interested, right? And in Malaysia, I think the banks it's quite interesting where they're structured two different entities, but a lot of times they share the principles together. So for example, Maybank is one and Maybank Islamic is a separate one. So I think it forces a lot of financial institutions to also listen to the needs. But a lot of times, I think none of panelists have actually mentioned this. I think a lot of citizens and individuals are suffering from loans and credit cards. I think people are not, are asked to step back from their work, or, mandatory leaves and all that without pay. I think a lot of government has pressured the financial institution to take a pause on the loans, but we're not sure. I think for Malaysia's side, there's quite a lot of confusion as well in terms of that loan. So it's my interest being, is there a pause, or is that an opt-in? Is it an opt-out? So I think that's where I would like to hear from the other panelists as well. I think the financial institutions are struggling in a way for Malaysia. But the fintechs are using this as an opportunity. For example, some crypto exchanges that has been launched and approved by Securities Commission are using this as an opportunity. Some fintechs have also raised through crowdfunding. Surprisingly, they are oversubscribed in Malaysia. So these are things that we're seeing that relates back to the principles of society right now and the needs of the people.
Thank you very much, Jenna. Bill, I mean, you're involved in fintech for good. I think we've had a question here from Ida, who says, can we have some comments on positive steps taken by different countries to bring finance to unbanked and the initiatives? At the beginning of the crisis, it kind of seemed that the need for, to focus on sustainability, financial inclusion will sort of drop off the table. It does seem to be coming back to sort of center stage, at least certainly the conversations we've had. What's your take on these, on this sort of purpose of fintech in terms of bringing more people into the financial marketplace?
Hey, well, Huawei has been involved in this space with our mobile money offering since 2011-12. We built with Vodafone in Africa and Pesa, with Safaricom and Vodafone. So, there's a $200 billion a year opportunity in terms of financial inclusion. And in these times as well, when people don't have access to get to a bank or a branch, they're transacting in terms of payments and remittances over the mobile device. So using both smartphones and regular phones as well. So, the opportunity right now in many countries is once again back to the theme I touched on in the very beginning, and the fintechs inserting themselves between the players that are traditional, that cannot react fast enough in this time of crisis. What's going on in my country, by my origin, the US, PPP loan programs, small medium enterprise lending, they can't book the loans fast enough and get the funds dispersed. So companies like Square are jumping in the middle and saying, let us help. Okay, and that's very, very quickly accelerating, connecting the real economy to the back end, and financial inclusion as well. If the U.S. government, as an example, or any government is going to disperse stimulus payments to consumers, why are they going to do that via a paper check?
Yeah.
Makes absolutely no sense. Okay. It needs to be digitally dispersed. And this is a perfect opportunity for fintech to jump in and make that happen. Okay. In terms of an integrated bridge. That can be done through mobile wallets. It doesn't have to go through traditional financial rails. It can go through telco rails. So there's a number of opportunities right now that can be pushed to the forefront for financial inclusion. So.
Thank you very much for that, Bill. Moshe, do you want anything to add? I mean, obviously, India, a massive country, a very big unbanked population. What do you think is going to be the impact of this on driving more people to to use financial services?
I think there are going to be two pieces to this. So India is actually a good example of showcasing a case study of how a certain event pushes people towards digital, but then traction is a different story. So when India underwent what's called the demonetization drive, when a host of our currency, about 96% of the currency flow was demonetized and changed, that's in terms of volumes rather than in terms of value. Many people did not have access to cash, right? And millions of people did not have access. Hundreds of millions did not have. And that's when Paytm jumped massively, because people had to use digital means to make local payments, right? And the adoption increased. However, once cash came back, then the uptick and the monthly active users for Paytm started dropping. But what I feel is that overall, when instances like COVID-19, demonetization, or critical changes to your economy take place, people may, when they're forced to use these things out of necessity, the stickiness may not remain with all of them, but it starts increasing the comfort with which people are doing it, and that actually then adds to the traction. So pretty much in line with what's happening in India, it will help financial inclusion. I think in the current world, if you have the right infrastructure, digital or otherwise, financial inclusion can be achieved, right, in localized environments, right? For another example is India has got 500 million bank accounts that they opened for the farmers and those below the poverty line to administer and send over cash incentives or subsidies direct to their account without any middleman, right? Now that's not digital. They literally will go to a bank account and take their money. So yes, fintech, when we started off 10 years ago or so, when the term came about, a lot of conversation would be around financial inclusion. And I do feel that there is going to be a second wave where people start looking at effective financial inclusion, not just about one-time or one-off payments, but in effect using different ecosystems to help. On the lending, the opposite of what's happening in the US is taking place in India, where the lending firms are actually not able to lend much because, as I said, the risk is much higher for them and their capital is drying up. So that's leading to these lending firms themselves being under threat or potentially having to close down. While in the US, they pivoted very quickly, and that will provide stickiness in the longer term for the US firms. And I would imagine in some other countries, wherever they're able to use fintechs for dispersal of these loans.
Yes, yeah. Thank you very much. We have another question here. I'm just looking at particular requirements. Within Japan and China. So Trevor writes, struck by the breadth of innovation, perfection of technology, but also some unique requirements, such as particular to local language and culture, that made it difficult to export technologies globally. Is this still a difficulty? Do we think that Japan and China can compete globally, specifically in the fintech space? Norbert, do you want to sort of take that from a Japan angle, and particularly around the conversation that we had yesterday around Japan trying to sort of position itself as a sort of natural harbour for financial services in Asia, given what's happening in other parts of the world and the region?
Yeah. Hey, Trevor. MUFG Investor Services, great business. Really like it. I think, first of all, I wouldn't put China and Japan into the same bucket here at all. I don't think that double byte characters have any role to play. I think in terms of Japan specifically, it's a question of the user experience, the customer experience, design, and the cultural difference in the consumer and the consumer expectation. So in Japan, you need to demonstrate depths of knowledge and detail to be taken seriously, while I would say generally in the Western world, you can keep it very simple. And this applies to PowerPoint slides, where in the US, maybe you have just a single picture on the slides, while in Japan, they're densely typed like a book and they actually read off in the presentation, or it applies to the app design on the mobile phone. And that creates a natural barrier if you try to take something that's very complicated and try to move this outside of Japan, because you basically need to completely redesign it for a different market. And there are good examples of technology where Japan has come first and couldn't monetize it on the global scale. The QR code came out of the Toyota supply chain in 1994, right? We're importing it back now for payment from China. The Japanese system that is the NFC equivalent for payments, and we were able in Japan in 2006 to do contactless payments on the mobile phones and pay our subway fares with that. The system is called Felica. They did try to globalize this and sell it further. It does have security weaknesses compared to the NFC implementation, so it never really took off outside of Japan. And one could argue that the way you get to a decision in Japan by a group collaborating and coming up with a product, you enter into some compromises, and Felica might well be a case where you didn't go for the utmost security standard. But I don't think there's any technical reason in terms of being able to scale a business from Japan into other regions. I think there's a huge opportunity collaborating with Singapore, for example, which positions itself as a Southeast Asian hub, and drive that forward. I think it's all centers around design and consumer behavior.
Thank you very much, Norbert. We do have a poll for you. I'm going to launch that now. The poll question: which Asian city will emerge as the region's leading financial centre in the next 5 years? That's just a bit of fun, but please take your time to answer that. Singapore is leading so far. I'm going to go back to your questions. There have been a number of questions which are looking at sort of, the obviously, unsurprisingly, the direct impact of COVID-19 on fintech. We've had one that's asking particularly on the risk of fintech failure. We've had another that's looking at specifically focused about asking about lending businesses. I guess it would be good, in terms of your role, your individual roles as heads of fintech associations and member groups, perhaps a couple of you could just give your take on, what are some of the stresses that your member companies are going through, and what does the innovation and investment picture now look like, or at least what does the investment horizon now look like, given where we're at this stage in the pandemic and the kind of attempt to resume back or get back to normal. Perhaps Jenna, you want to start from Malaysia, and then we can do a bit of a spot check around the world.
Thank you, Simon. I think investment will be rising for fintech. Not specifically on. I haven't seen a lot on the blockchain side, but I think those who are touching on the social side, such as insurtech. I think Mushir can add on to this. I think insurtech is rising. It is quite difficult to tackle insurtech, virtual bank and new banks that is targeted into different segments. Could be SMEs, could be your individual savings, could be different target market, the underbanked, the unserved. I think those are rising. Remittance is also rising. I think lending, I'm not too sure about that yet. I don't see that much, but I think typically the more difficult the product is. A lot of investment in cybersecurity as well. That I think, I'm not sure what you've seen, but on my part, I've seen a lot of news on cybersecurity. A lot of hackers are going into databases, companies, even small businesses right now. So that is where we're going. Platforms are where investment are going as well. These are typically, they're what investors are looking for. SaaS model, yeah, and looking at this, I think in terms of fintech, is there a slowdown? I don't think so. I think it will just rise up, and regulators around the region will be competing, issuing out licenses, or they're trying to look at what the other regulator is doing as well, just to enhance the business model side and to welcome different experts and investment coming into their respective country. So that's my view.
Thank you very much. Mashir, do you want to sort of follow on from that?
I have a mixed view on this, right? Like for the first case, in terms of overall in the medium term, I think it's going to be positive for fintech, and it will lead to more fintech adoption and more investment. And I'm saying medium term, I'm talking about the 9 months to the next 2 years, right?
Yes.
In the short run, whatever we've seen in terms of funding so far is probably driven through deals that were initiated at the beginning of the year or turn of the year. As you know, the VC deals and announcements typically take anywhere between 3 to 6 months to go through. And that's what we're seeing in terms of that. But even then, the numbers have come down drastically across Asia. Even if, say, India has overtaken China in VC deals, you're still talking about a reduction in the total value of those deals as compared to last year. So that's point number one. The point number two is we have to be very cognizant of the fact that when the economy is severely hit, there may be more number of people transacting using digital solutions, but the volumes and value is going to be much lower. As Namir also mentioned, when you have the means, but I'm not going to go shop, I'm not going to do a lot of transactions, then that's going to impact the bottom line of the fintech, right? So that is an important element for us to keep in mind. So that will play a big role in how fintech is able to grow. That's why in the short run, I see that as a big issue. And that's what's leading to a lot of fintechs struggling in the region as well, because the governments are coming with a lot of support, but in general, because the end customer may not be generating that much high value, so you don't have as much revenues as you were getting previously, or not as significant. Secondly is on the B2B end, banks are largely keeping their investment on hold, right? Or they're doing POCs and just waiting for things to tide over before they go back into their implementation. So there's no revenue. So the fintechs are left with having to have big runways and having to fund their stuff without new VC investment coming in or bridge rounds coming in, as well as revenues not growing. So that's one big risk. We may see a significant bankruptcies like Norbert was mentioning with regards to the small banks in Japan. I expect a certain chunk of fintechs to get severely impacted in the next 3 to 6 months. The first 3-4 months, people have had their savings, they've had their capital from their VC investments, as well as government support that saved them. But once that starts running out and is not feasible enough, I see a lot of hurt and pain towards the end of summer, unfortunately.
Yes, some challenging times ahead. Namir, do you think this, what's happening is going to cause any less of an interest or focus on fintech in the MENA region?
I completely concur with the thoughts of Mashir, what he mentioned. Spot on, right? So basically 6 months, usually the average time for a startup to have a runway is around 6 months, right? And a lot of startups, because liquidity, like I said earlier on, if you can master your liquidity in these tough times and in these crunch times, you should and you may get through, right? So liquidity, mastering the liquidity should be definitely on top of your priority at the startup. And then definitely in the medium term, as Mashir mentioned, as a lot of VCs are still holding on to their deployment, a lot of bank funds, a lot of other larger funds are holding on to their funds right now. It would take at least 6 months to 7 months for them to actually have that comfort back of stepping into the game again. Rightly mentioned, a lot of the deals that have been happening, there were deals that were done before. right? So before pre-COVID, and they're being just announced right now. Therefore, it is critical and pivotal, like I said, on a startup perspective. I'll just give a random advice is that just focus on the product, right? Now, one. Number two, the reason why I'm saying that is the consumer is right now open to these platforms, but let's also understand the consumer at the same time will get overwhelmed with the number of platforms that will come towards them, right? So that, a customer who's being overwhelmed will definitely end up selecting the one that is prominent. For example, I mean, the customer will actually end up choosing a few of them, but then yet again, you don't want to overcrowd it, because then that is going to lead to lack of, that is going to lower the customer experience, lower the customer confidence as well into fintechs. But yet again, those who are able to build the product nicely, are able to come up with the solid propositions. Once again, those are the ones that will be able to once again win the game in the longer run. So 6 to 7 months is going to be difficult for investments to be there. If you have the cash and if you can burn strategically, I would say that is what's going to be happening in our country, in our region. It's not much different. Things are a little slower at the moment in terms of investments. The deals that are being announced are those deals, as Mushi mentioned that earlier on. So I mean, we're no different than other regions. However, some of the verticals that I feel that would definitely pick up is going to be on the SME side. So we have realized the importance of SMEs, not just in our region, but globally. If SMEs are hit, the economies get hit, right? So there's going to be significant focus when it comes to lending of SMEs, which means KYC, and the credit checks for SMEs and credit scoring SMEs is going to be something that's going to pick up significantly, because they have to lend to drive the economies, because all the countries would want their SMEs to come back in. At the same time, there's a very interesting product that's in India, which is called as Samosa POS. I love the concept, and I love how they have actually tried to basically transform the retailer, a common retailer who cannot afford to have a POS device, because they realize that POS machines are expensive to be deployed, in a tier 2 to tier 5 retailer, right? So what they have done is that the retailer is basically used to using the old Casio calculator, right? The old looking one. So they have replicated the same looking calculator, and they have made it into a smart device that does everything for them, from accepting the card, from accepting credit, debit card, different payment schemes, at the same time being able to manage their balances, being able to manage their, the balance, whatever their trading has been. So they have day-to-day trading. So I believe that this important segment, this important vertical of SME is going to be really, really a gold mine as well to be tapped onto, because banks, the traditional banks, did not focus on it the way they should have earlier on. And now that the dependency, and there's an urge by the government as well to support the SMEs, I think this is going to be a very booming specific vertical when it comes to fintech. And then once again, you're looking into multiple subsectors such as RegTech, you're looking at onboarding, you're looking into payments. There's a whole world out there for SMEs, and I feel this sector is definitely going to boom in the coming days.
Yes, thank you, Namir. That's certainly something very similar to what we've been hearing in, through much of this series of webinars we've been running through the pandemic. Bill, from where you sit, do you think we're going to see a new raft of sort of potential big giants, or is this pandemic just going to lead to the big platforms getting ever stronger and just creating new services to serve more and more specific groups and segments?
I think the dividing line, between the fintechs and the incumbents, or the giants even, is still the storing and protection of financial assets. That's the holy grail or nirvana that's left for the big tech players, the platform giants, to go after. People in this day and age, with the virus going on and the dilemma all the countries are in, the population is not running out the door and departing their traditional financial institution to open up deposit accounts or insurance accounts or wealth management accounts outside what they're comfortable with in terms of safety. Okay, so that's an area of opportunity, that the platforms are going to continue to go after, inside China and outside China. Okay, it hasn't been completed yet, but it's once again going to come back to customer experience. There's the statistic, consumers will give a traditional institution so many chances before they depart and take their money elsewhere. So in this day and age, if they can't transfer money from the financial institution, they can't get a sense of security, they're gonna go elsewhere. They're gonna go to a Monzo or a Revolut Bank or Zonbank in Hong Kong and so on and so forth. So, and that extends to what Namir was saying as well. Wealth management in terms of robo-advisors and insurtechs, it's going to be the same thing.
Thank you very much. Thank you, Norbert. We just leave the final word on this to you. Your members. What are they saying? What sort of pain are they feeling, or indeed are they becoming more energized by this and saying actually there are some things that we can do here, and feeling more optimistic?
Well, I think the funding situation all around the world is very difficult. So it's a question of whether people can stretch out the funds to survive this crisis. But that ultimately is capitalism. And so if you believe in capitalism, then we need to accept a few bankruptcies, and that includes startups as well, right? You can't claim on the one side to build a unicorn and become a billionaire and then not live with the risk on the downside. So I find this not right. I do think there's plenty of opportunity. The differentiation in the fintechs is always, for me, above the line, are you actually a regulated business, or below the line, are you simply a software vendor? And the regulated side will not necessarily change through this crisis unless we get certain mandates for services that must then be provided in a digital way. I think that on the service provider side, clearly, again, we go to digitization, and especially in Japan, we still have a very paper-based market. We have a market in particular in the insurance sector where people still have the fax machines. And so I do think there will lots of investment. And there was another question whether there will be a slowdown in innovation and fintech projects. I think there will be a refocusing of the whole project portfolio naturally, because that needs to be trimmed, and some of that will stop, and that might be also some of the non-essential projects, but there is a super high drive towards digital services, remote working, where the companies are not well equipped, and there will be a spike in investment. And you've seen it already, right, in simple things as the number of Zoom subscribers, Microsoft Teams subscribers, and all the vendors that are coming up that also help associations like ours to replicate the networking experience remotely. I mean, there's fantastic new products out that we wished we probably had earlier. So if you haven't founded a fintech yet, typically the crisis or just after the crisis is the best timing. The most successful fintechs that we're looking at now, right, have typically been founded, let's say, in the 2011 to 2013 timeframe. So my prediction would be that the 2020, 2021 vintage of startups will be an exceptional one.
Good. Well,
if I may just quickly add on the virtual end,
yes,
I agree with Norbert. I think the virtual world is going to be very different. We as FinStep Asia are launching Asia's first virtual fintech fair, where people can interact over a 2-day conference as well as exhibition with top fintech companies and corporates across Asia, right? So not just as we are the first ones doing it around in the region, but there are many others who are looking to do it, and that's an opportunity for both startups as well as decision makers to interact without air travel, and that's going to be the future for the next 6 months to a year, till things calm down with COVID.
Well, we look forward to seeing more about the fintech fair machine. It's, do catch us up on that. Well, I can't thank you all enough, ladies and gentlemen, for taking the time to be with us this afternoon. Thank you so much again, and thank you for your patience. I know it was a big panel, quite difficult to get everybody to get their comments across. So thank you for that. Just a final word. The poll, we asked which Asian city will emerge as the region's leading financial centre over the next 5 years. The options were Tokyo, Hong Kong, Singapore, Shanghai, Delhi, and other. I have to say it's well, there's no match in it really. It's Singapore. Well over half of you have said Singapore is going to emerge as the leading financial centre out of this. Well, let's see. Interesting food for thought. Again, thank you all very much for your comments today and for taking part. I hope we can include you in another session in the future. We're back in a couple of weeks towards the middle of June, looking at financial inclusion in particular, and the role of fintech startups in helping to drive that, and some of the dynamics that are reshaping that part of the market. So an interesting follow on from our conversation today. To all of you, to Norbert, to Jenna, to Sai, to Mashir, to Bill, and to Namir, thank you very much for being with us today, and stay well, stay sane, and here's to happier times over the next 6 months to a year. Thank you very much. Take care.
Thank you for having us, and take care.
Thank you. Bye.
Bye.
Bye-bye. Take care. Have a good one.
Bye-bye.
Bye.